Hello traders, investors, and crypto enthusiasts. Welcome to our channel, where we deliver deep dive analyses, hot news, and reliable projections about the blockchain universe, Web3, and digital money trends. Today, we're exploring a revolutionary decision. Synaptogenix, a clinical stage biopharmaceutical company, has chosen to accumulate Bittensor as a reserve asset, rejecting Bitcoin, which has traditionally been the most popular institutional bet. This move, revealed in an exclusive interview with BeInCrypto, highlights how decentralized AI tokens are gaining traction in the market, with projects like BTC Bull Token and Virtual Protocol also catching the attention of major corporations. We'll dive into the technical fundamentals, tokenomics, and strategies behind this bold wager, and discuss why DAO could become the new benchmark for institutional value creation. Rationale behind the choice. TAO versus BTC on the institutional radar. Synaptogenix, valued at $4.98 million, announced an audacious plan to purchase $100 million in TAO, starting with $10 million in cash reserves. This decision reflects a long-term strategic vision, contrasting sharply with traditional approaches like strategy, which holds 592,100 BTC. While BTC is seen as digital gold, DAO represents a leap into decentralized AI infrastructure, a sector Synaptogenix believes is undervalued compared to AI's projected $3 trillion market size by 2030. The company's spokesperson explained that TAO shares BTC-like traits: fixed supply and decentralization, but offers a unique edge: social innovation incentives. Unlike BTC miners, who spend $10 billion annually on energy to secure the network, DAO validators earn rewards for contributing AI models, computational power, or new AI-driven businesses. This creates a value model tied to practical utility, a framework also pursued by tokens like BTCBULL and Virtual. TAO's adoption also aligns with the surge in decentralized AI investments, up 200% in 2024 per CoinGecko data. Projects like Render and Akash Network lead this movement, but DAO, as Bittensor's native token, has a distinct advantage. Each subnet generates its own revenue, boosting TAO's utility without inflationary token issuance. Technical and economic fundamentals. Why TAO outperforms BTC. Bittensor operates with a fixed supply of 21 million tokens, mirroring BTC. But its economy is hybrid. Tokens are burned when miners buy AI slots and rewarded for technical contributions. This deflationary dynamic resembles Frax finance, but with a critical difference: every TAO token represents a node in the AI network, not just a store of value. BTC, despite its security and adoption, faces criticism over mining centralization, whereas DAO distributes rewards across specialized subnets like AI inference, DeFi analytics, and data validation. This reduces risks of Sybil attacks and market manipulation. Issues plaguing tokens like Fartcoin and Pepe. DAO also offers a lower entry cost. Trading at $380 in June 2025, its appreciation potential surpasses BTC's $106,000 price. Synaptogenix emphasized that even with TAO's 30% volatility in 2024, its practical utility mitigates post-ATH dump risks, such as Fartcoin's 50% crash in January 2025. For traders, this means opportunities in purpose-driven tokens like TAO or BTCBULL. Market dynamics. How the AI crypto convergence is redefining investments. The AI market is booming. ARK Invest estimates growth from $300 billion to $3 trillion by 2030. In this context, DAO positions itself as the first AI token to capture institutional liquidity, with Oblong and Strategy announcing similar plans. The difference? TAO isn't just speculative, it's operational. Every subnet in the protocol is a mini ecosystem akin to Snorterbot, which uses AI to filter rug pulls and memecoins. While BTC remains a passive value reserve, TAO is productive infrastructure. Companies like World Mobile and Ondo Finance use DAO to tokenize 5G networks and issue JPY-backed stablecoins, respectively. This shift reflects a paradigm change: utility tokens outperforming pure currencies. Synaptogenix justified its bet by noting DAO's $3 billion market cap is a fraction of traditional AI's $500 billion valuation, leaving room for 10 to 20x growth if it follows render's 400% rally in 2024. However, risks persist. TAO isn't yet listed on major exchanges like Coinbase or Kraken, limiting liquidity. Tokens like Virtual, which has Coinbase partnerships, show how regulatory-compliant listings can accelerate adoption. Synaptogenix hopes the Genius Act will create a favorable environment for TAO, staking and supply. Reduction, how DAO generates superior returns versus BTC. Synaptogenix highlighted that DAO staking is more complex than BTC ETH, but offers higher rewards. While ETH staking yields 4 to 5% APY and CRV offers 8 to 12% APR. DAO rewards validators with subnet-specific tokens, generating ROI of 50 to 100% depending on the sector. Supply reduction also favors DAO, with $100 million in institutional purchases projected by 2026. TAO's circulating supply could drop 15 to 20%, creating scarcity akin to CRV's 62% burn in 2023, which sent its price 300% higher. For traders, buying below $380 with a stop loss at $300 could be a winning strategy, especially if the first $1 billion project in the Bittensor ecosystem emerges in 2025 as predicted. The company also warned about whale sell-offs. 10 wallets hold 35% of DAO, scenario similar to WLFI, where supply concentration risks dumping. However, mandatory staking for DAO mining reduces this risk, as tokens are locked in smart contracts, preventing immediate sales. Future projections: DAO as the new reserve standard for AI companies. With decentralized AI expanding exponentially, Synaptogenix predicts DAO will become the reserve standard for AI corporations, just as BTC dominates finance. The logic is simple. BTC is digital gold, DAO is digital oil, a scarce resource fueling the next tech era. Post-2026 Coinbase listing, TAO's liquidity could rise 50%, attracting spot AI ETFs. Bittensor's ecosystem is accelerating. Subnets like AI inference and data validation already generate $200 million in annual revenue. With forecasts of 100 subnets operational by 2027, driving DAO demand, Synaptogenix believes DAO could surpass $1,000 in 2026. Even if BTC tests $120,000 with ETFs and RWA tokenization as key catalysts, regulatory hurdles remain. The US SEC still classifies Ethereum as a security, complicating AI token ETF approvals. Projects like Chainlink, which connects AI to real-time data, may legitimize the sector. Conclusion: decentralized AI revolution and the new investment paradigm. Synaptogenix's DAO bet isn't just technical, it's a paradigm shift. While BTC remains the most stable value reserve, DAO represents a new class of assets generating real-time utility. Tokens like BTC Bull and Virtual follow similar paths, but TAO's native AI protocol edge sets it apart. For our viewers, BTC and ETH hold core positions for correction protection. TAO and Virtual. Buy below $380 and $0.0003, targeting $500 to $600 and $0.0005 to $0.0006. Strategic. Memecoins. Projects like BTC, BULL, and SPX 6900 offer leverage but demand rigorous risk management. What do you think? Can DAO replace BTC as a value reserve? Is Synaptogenix ahead of the curve or taking excessive risks? Share your thoughts in the comments. Don't forget to subscribe for real-time updates and live streams on blockchain charts, news, and trends. Remember, crypto investing requires research, discipline, and patience. Bitcoin may be foundational, but never underestimate the need for secure wallets. Till next time, may the market treat your trades kindly.